Hey everyone, in this installment of Q&A with Wall Street, I'm going to do Supermicro Computer stock. Now, unless you've been sleeping under a rock, you'll know that Supermicro Computer is one of the hottest AI stocks in the market in 2024. The stock price has absolutely surged. So it'll be interesting to look into the details and see what's going on in this question and answer session with Wall Street and Supermicro Computer.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy
All
now.
right, so the first question comes from Don Wang from Barclays and asking about, can you talk about the supply versus demand and the backlog level? On the supply side, are there still ongoing constraints? Good questions, right? You want to know the company's supply and demand. Where's the constraint? Is there not enough supply or not enough demand? And right now, what the CEO, founder, chairman of the board of Supermicro Computer is saying is that indeed demand is still stronger than supply. And remember, in its latest quarter, revenue increased by 103%, and still demand is stronger than supply. So if we have more supply, we'll be able to ship more. Wow. So even though their revenue increased 103% in the latest quarter, if they had more supply, they would have been able to send out more product and generate more revenue. That's impressive. That's good news for Supermicro Computer stock investors. Moving on, Don Wang wants to know about liquid cooling. You talked about expanding to 1,500 racks per month after June this year. And the CEO again coming on and saying, so we have a huge capacity ready and have very mature total solution ready. But lots of customers, although they like liquid cooling, their data center needs more time to be ready. So they're not prepared to upgrade to this next generation cooling technology. So the CEO going on to say, I believe liquid cooling percentage will continue to grow, but at this moment, most are still air cooled. So they're still with the previous generation air cooling. Liquid cooling is a better solution, although data centers need to upgrade to be ready for this next generation solution. Supermicro Computer is ready in anticipation of that, but the data centers are still not ready. So that might take some more time. It doesn't look like it's going to be anything imminent, not in the next quarter, or probably not even the next 2 quarters, because if that were to be the case, the CEO would have talked about that in this question and answer here. It would have been more specific in terms of, well, not this quarter, but next quarter we'll start to see, or sometime in 2024 we'll start to see that transition, but not giving any specific time, meaning that it's not happening in the next quarter or two. So the next question comes from Samik Chatterjee, I hope I said the name right, from JP Morgan, asking about gross profit margin, saying that gross profit margin had a step down in the second quarter and you're guiding to a moderation in the third quarter. How are you sort of evaluating these opportunities? Because remember, as a business, you can always increase sales by offering promotion, incentive, and lower prices. So you can sacrifice your profit margins in the hopes of growing sales or keeping sales elevated. In fact, that's precisely what's happening with the EV industry, right? All those price wars that you're seeing are EV companies like Tesla sacrificing their gross profit margin in the hopes of boosting sales. So that's why this analyst is asking about the gross profit margin and how the company is balancing that with sales. So how are you trying to grow and keep your margin at the same time? So what the CFO is saying here is we always try to go in and out. So we go into the organization and we try to spread out into different divisions. And so in order to do that, as we take on new customers, we evaluate and try to win the business, which requires us to be competitive. So at this time, we are growing really quickly. In order to do that, in order to take market share, we will take opportunities by being more competitive on pricing. Interesting. Okay, so Supermicro Computer saying that we'd rather get the market share than keep our gross profit margin higher. So we'll sacrifice our gross profit margin. We'll give customers better pricing so that we could go in and we could gain access to this business, and then we'll try and expand, right? this way of explaining it is different, right? Saying that they try to go in and out. I've heard before maybe you've heard it too, the land and expand strategy, where businesses will try and land with the company and then expand within the company. It's another way of saying that, go in and then out, right? Land and expand. So just try and get in with the company, make that initial sale, make that initial agreement, and then from there, try and expand, try and secure more, secure greater quantities, and develop that relationship further. So right now, since they're growing so quickly, more of those sales are introductory sales, competitive pricing to get in the door, and later on, that'll go to increasing profitability longer term. And then the CEO jumping in to add and saying that as they grow these sales, as they gain market share, it'll grow their economies of scale, and the operating profit margin will still be able to keep in a healthy position. So while the gross profit margin might decline, the total operating profit margin will still be healthy, because they'll make less profit per sale, less gross profit per sale, but they'll make more sales, which will offset the amount lower per sale. That's what the company is thinking here, trying to land and expand. Although I find it a little surprising, usually with companies that are growing this rapidly, 103% revenue growth in the latest quarter, operating in the AI market where, as you hear, supply is constrained, there's more demand than supply, you would expect profit margin to be rising. You would expect a limited need to offer these competitive pricings, because there's so much demand in the market that you can just sell everything you can produce. And we just saw the latest quarterly update from NVIDIA, where they reported better than expected gross profit margin, and their gross profit margin is actually expanding widely as they're increasing sales over 200% year over year. So Supermicro Computer is improving, generating great deals of sales, big sales increases, but differentiate that with a company like NVIDIA that's not only growing sales, but also growing sales at larger gross profit margins, meaning those sales are of a higher quality, less promotional, less competitive pricing, which is more impressive than what you're seeing here, which is still impressive. 103% revenue growth, more demand than supply, still very impressive, although not as impressive as NVIDIA, although admittedly, very few companies in the world right now are performing as impressively as NVIDIA is, as it's in just the right place at the right time with the right product at the right price. And so it's just benefiting from tremendous tailwinds in this position. So still solid quarter from Supermicro Computer, and very interesting to find out the strategic thinking behind sacrificing profit margin and gaining access to a company, trying to go in and then go out. So I'm looking forward to hear more from Supermicro Computer in their next quarterly update. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.